Calling all Palantir stockholders. Watch this video from beginning to end and I guarantee you that I convince you to sell at least a little bit of your Palantir holdings. Palantir was listed on the New York Stock Exchange via direct listing, not a traditional IPO, 5 years ago from right now, and it was about a $21 billion valuation, approximately $9 per share. And well, as you can see, just 5 years later, it's now boasting a $431 billion market capitalization. That makes it worth more than all of these companies right here to the left. And that means if you had just invested $1,000 5 years ago, you'd have nearly $20,000 right now. And that's largely due to this guy, Alex Karp, Palantir's CEO, and his white tight t-shirts. All jokes aside, he is a great CEO, up there with the likes of Jensen Huang, which is NVIDIA CEO. So what's caused this massive explosion in stock price? Well, not only is it Alex Karp's strategic leadership and execution and being at the forefront of an AI-driven momentum market, well, there's also one other thing. You see, Palantir is what we like to call a revenue growth accelerator. So picture this. So you have a revenue figure, say it's 250 million, and then the next quarter you're like, okay, now we're doing 500 million, and then the next quarter you're doing 1 billion in revenue. That's exactly what Palantir has been doing. It is quarter over quarter growth acceleration of revenue, and Wall Street loves this. And this has happened before with many companies in the past, including Amazon, Netflix, Tesla, NVIDIA as of recently, and now Palantir. So what happens when that revenue growth decelerates? Guys, there are tons of case studies of this, but let's look at Netflix. In 2011, it reached a peak of $43.50 per share. Look what happened in just 3-4 months later. A low of $8.91, down 80% in just a matter of months. And let's look what the revenue was doing. So the revenue doubled from 2009 to 2011, and then the revenue still grew, but by a much smaller amount from 2011 to 2012. And look what happened. The point is, if you're up big on Palantir stock, congratulations first of all. But realize trading at 600 times trailing PE and 200 times forward earnings is priced for perfection. You see, Palantir's growth story makes a lot of sense, and I think it's a great company that will continue to do great things, but you can pay the wrong price for a great story. Even if you're going to hold this stock for 30 years, which at this point looks like a great idea, I would still take some off the top. I mean, companies don't grow at an extremely fast rate forever. There are hiccups, there are bumps in the road. And unless you think you can exactly time when this revenue deceleration happens, maybe you should trim a little off the top.